You're probably right now well qualified and ready to buy a home.
You bought your daughter a nice house. That's nice.
However, if you're like a lot of home buyers, you may do one of these 5 things and completely screw up your chances of buying a home. So I'm gonna share with you the 5 things that you never want to do when you're buying a home and how to avoid them. And before we talk about the 5 things you should never do before buying a home, I wanna make sure that you have a clear understanding of what we look at as a lender. It's based off of your credit, your income, and your debt. These 3 things not only determine how much money you can borrow and how much we can approve you for and what that approval looks like, but it determines your lending terms, your interest rates, your closing costs, any type of program you might be able to use. So anything that you could do that would damage your credit, your employment or income or your debt, that's gonna keep us from getting a loan for you.
He bought a house and it killed him.
Which leads me to the first thing you should never do when you're buying a home. Don't open new credit cards or new loans. Okay, why? So the first thing to consider is that when you open up new accounts, you're gonna have a hard inquiry on your credit. So that can drop your credit score in the future, which you don't wanna do. Keep in mind, even if you're in process buying a home, if your lender's pulled your credit, then they're going to recheck your credit before closing. This is going to be looking at seeing if there's any drastic drop in your credit score, as well as looking to see if there is any new accounts opened. So you don't want to go out and run up the debt because now you're in a position where that may interfere with your qualifying. I know this is really hard to do. Seriously, it's difficult to buy a home and know that you need to get furniture, window treatments, a lot of things that you would want to use credit for, and things that you want sooner than later when you move in, but just resist the temptation. So keep in mind, this includes personal loans, credit cards, store accounts, anything that is going to trigger that hard inquiry and add to your debt. You want to avoid these types of accounts. When you open new accounts, this will adjust your debt to income ratio. You're going to have new payments that are in line. That, unfortunately, is going to put you in a position where now your loan approval is no longer valid. We have to go back and re-underwrite the loan because there's a certain percentage that can or can't be approved. So avoid opening those accounts because, well, it could be a problem. Even if zero balance, 0% interest, all of the wonderful stuff that they tell you that would push you into a position where you want to go through and open the account, don't do it. The next thing that you want to avoid, don't switch jobs either right before buying a home or in the middle. That's the worst thing you can do. Now, lenders look at what I consider to be like the 2-3 rule. We want to show stability of your income and your employment. So we'll look at your 2-year history based on what you've been doing, and we'll also look at the likelihood of this to continue for the next 3 years. You might find yourself in a position with like a promotion or a raise or something that looks really good, but the issue is that changes in your employment or more importantly, your pay structure could completely invalidate your loan approval. I have clients who will go from a position where they're making a great salary and they have some bonuses or incentives and they switch their position over to where they're more incentivized. Bigger bonuses, bigger commissions, they're gonna make a lot more money. The problem is that the way that we calculate the income doesn't allow us to look at that increased income until you show 2-year stability. So you want to watch out for making those types of moves. It'll put you in a position where you may not be able to buy the home at all. Now, I'm not saying you can't switch. I'm not saying you can't take that promotion. Before you do any of this, just make sure you talk to your lender. Make sure you find out, okay, if I do this, then what impact will that have on my ability to get to the closing table? Next, and right in line with opening up new accounts, avoid big purchases. Now, maybe you're paying cash for something. You're gonna buy a nice new car, or you're gonna buy furniture, something that you want. Make sure you talk to your lender because we might be looking at how much cash you have on hand for your loan approval. It's not just about having enough to get to the closing table, but lenders look at reserves. We want to make sure that after the transaction, your down payment, your closing costs, we want to make sure that you have a certain amount of money in the bank. So don't go out and buy things that could otherwise create issues, and especially if you're using credit, right? Looking at point number 2, if you're in a position where you have to open a new account to buy this, then that could create a problem altogether. I think it's important to understand, we're taking a risk as a lender. You're taking a risk as a buyer. Ultimately, we all want the same thing, right? We want to lend you money and we want to make sure you can pay that money back. When you make big purchases or open up new accounts, it's difficult for us to determine if, fast forward, once you have this mortgage payment, if you're going to be able to still uphold your end of the deal. So just make sure that you're conscious of this when you're going through the process. Number 4, don't move money around before or during the process. So when we go through, we're going to look at the pattern. We're going to follow the money. We want to make sure that you have the money that you need to make the payments, and then we want to make sure you have the money that you need for the down payment and closing costs. When you start to move that money around, it's not that it necessarily could create an issue with you getting your approval, but it may create an issue with the documentation that the lender requires, and this could become an incredibly cumbersome process for you. You might get very frustrated because your lender now needs to see which account that money came from that came from this account. And now, let's say you're in a position where you moved it from another account where there was a large deposit from someone else. Now that could be a red flag, and that might be something that the underwriter needs to see. The bottom line, keep it simple. We want to make this straightforward and easy. We want to make sure that we need the minimum amount of documents required to get you the best loan terms that are possible. So before you make those moves, let your loan officer, whoever you're working with, let them review and advise you on when you should move the money and if you should move that money at all. Number 5, last, and what I think brings this all together, just don't make any big financial moves right before when you're looking to buy a home. And this covers all the bases on this. You might think that paying off that credit card is a really good idea. A lot of people don't realize that closing an account or paying an account down may have a negative effect on your credit scores, which could get in the way of your approval. You might think that taking your money and moving it immediately over to a different account, or getting a gift, if you're getting a gift from someone, maybe you want to get that money in your account right away. Well, that might go against the strategy and the plan that your loan officer has. You have to make sure that you're working with communication. You want to make sure that you're upfront. Think about it like going to the doctor, right? If you smoke 2 packs of cigarettes a day and you go to the doctor with your cough and tell them you don't smoke, how are they going to help you? Well, your loan officer is the same way. You have to be straightforward with us. And before you actually make any type of financial move, let us direct you. The reason being that we know how you can get where you want to go. We have a better understanding of what you need to do based on what we need to see so that you can get the loan that you want. I want you to think of this like I'm your lawyer. I'm going to prepare you for court. I'm going to prepare you, more importantly, to win. And this could be what you need to do to win the property. Really competitive market. We want to make sure you're in a position where your offer is going to get accepted. It's also going to be making sure that you're in a position where you get to win by getting the best loan terms. You're going to follow our instructions, our counsel, if you will, as an attorney in this comparison, to show you, look, this is what we need to do. This is how we're going to do it, and this is where you're going to end up. That's the best way to get where you want to go, by trusting the professionals that you're counting on. So if you found any of that helpful, and now you're considering, should I buy a home in 2025? Watch this video, and I'll break it down for you and tell you everything you need to know.